The coolest thing about the syndication structure is it doesn't require any of your own money. Now, it's going to require some money because you need to build a website. You're going to hire a coach that costs money. The education is going to be mostly free because you're going to listen to podcasts and YouTube, and it costs a little money, but you don't really have to have a ton, right? So it's kind of nice that you could just if you're willing to do the work, it's definitely a possible business to do without a ton of money, which I really love about it.
Welcome back to Invest in Rome, where we talk about living life by design, building wealth that gives you freedom to live your story. Today, I'm joined by Eric Nelson, real estate investor, coach, and founder of Wild Oak Capital. We're diving into 3 things every investor wants to know: how to get into multifamily when you don't have much cash, why raising capital feels so hard, and how to build real freedom from doing all of that. Welcome there, Eric.
Oh, thanks for having me. It's my pleasure to be here. Those 3 topics I can talk about all day, so we can dive really deep. Yeah, I'm excited to be here. Thanks for having me.
Yeah, I appreciate you hopping on. You're in Spain. It's morning here, but it is nighttime over there.
Yeah,
So,
just had a family with kids, and then jumped in here to have a podcast. So yes, it's evening, but that's the life I live. I try and balance it well, but it is, sometimes I'm talking to people on Zoom where it's nighttime here. You can see this. Well, you can't see, but the sun is set, of course, a couple hours ago, and you guys are just getting up. So it's kind of a funny switch.
yeah. So let's just kind of get started. If someone wanted to get started in multifamily, they don't have much money. What's their first move?
Okay. First move is always education, always. Whether you're doing multifamily, self storage, single family, it doesn't matter. If you're investing at all, the first thing to do is get really educated. So if you're listening to this podcast, then you're on the way, right? That's how I learned, was tons and tons of podcasts, several books, just like listening and listening and listening and asking questions, going to meetups, that kind of thing. So the first is education. Then once you're like, okay, I understand the business, I know how this works, you can't know it all until you do it. And so you really are going to have to take action. Now, I think there's a couple other things that you could do to get started that I think are kind of firepower. For me, I hired a coach. I hired someone or a mentor or a group or something, someone who's done it before you. You're almost certainly going to need a KP, which means someone to help you kind of sign on the debt if it's your first deal, help you kind of close that first deal. And so that person could be some kind of mentor, and that's usually a good way to go. So it's really about education as the first step. I can go way more into that about money. The coolest thing about the syndication structure is it doesn't require any of your own money. Now, it's going to require some money because you need to build a website. If you're going to hire a coach, that costs money. The education is going to be mostly free because you're going to be listening to podcasts and YouTube and some books, things like that. But it'll cost a little money, but you don't really have to have a ton, right? So it's kind of nice that you could just if you're willing to do the work, it's definitely a possible business to do without a ton of money, which I really love about it.
Sometimes people get stopped though because they think that they need to have owned something, or maybe they need to have owned or been into real estate before they get started. Do you think that's true?
I think it depends on the person, right? So, it's not one blanket answer. So I normally tell people it's kind of nice to start with like a single family, if I'm being very honest. Do you have to? No. Like if you're a go-getter and you're like, I am all in, I can learn this business, I'm ready to go. And if you hire a mentor who's done it before, I think that's kind of the key. It's going to be hard to go out and do multifamily on your own, right? You might be able to buy like a quad or a duplex. So if we're speaking like kind of a small, that's possible. If you're looking at 50 units or more, it's going to be hard to do it on your own. You're going to need some teammates and probably a mentor. And so it's definitely possible. Like my first partner, we partnered together. He'd never bought real estate, never even bought his own house, actually. And we partnered together the first deal. So he's a testament to, no, you don't have to. It's nice sometimes to buy a single family only because you learn a little bit more about the lending process, the leasing process, evictions, maybe, hopefully not, that kind of thing, collecting rents, books, that kind of stuff. But let's say maybe you're a business owner, or maybe you are in a realm where you understand profit and loss, you could absolutely dive in. So it depends on the person. If you're brand new, let's say you're really young, and I don't want to young people have a lot of energy. So that's sometimes not exactly true. But if you have no experience in business, it might be more challenging. That said, if you're about to work and you're ready to rock, then yeah, anything's possible. Again, my partner is a testament to show that He'd never bought anything. We went out and bought a 48 unit without him having any experience. So it's definitely possible.
Yeah, like, can you walk us through that first deal? How did you find it?
Yeah.
How did you find your partner? And how long did it take and all of that?
Oh, I love that question. Okay. Well, we started in 2019 and it was just a little bit easier back then. After 2020, during the COVID years, it was a little weird, but then it was even easier from like 2020 to like 2022. There was so much money. There's a lot of deals. So honestly, the truth is it was a little easier. Now it is beginning to flip. At the time we're recording this, we're seeing way more deals. In fact, that's what everyone's saying in the multifamily market. It's sort of shifted. So now's a great time to start. Now's a great time to be in. To answer your question, I found my partner through a mastermind. So I had hired a coach and then I had like paid for this mastermind group, just a group of people kind of doing multifamily. And I think both of those things are really, really valuable. I found him in there and it just happened to be that we are both looking in the same market. I chose Tulsa for no other reason than I'd been there before. I'm from Colorado. I'd spent barely any time there. I just like luckily chose it. It's turned out to be great. And I love that market now, but I just kind of picked one out of the hat. We could talk about
Well,
market
I'm just
too.
yeah, I wanna ask about the market
Okay.
because I'm curious
Okay.
about Tulsa, but we'll come back
Yeah,
to that.
like we can come back to that and how to choose a market, but I just sort of picked one. He was also looking in Tulsa. We got to know each other. We did several Zooms. He at the time was living in Dallas. I was living in Colorado. But we're like, let's partner up. We just liked each other. We also had, we had some skill sets that could help each other out. I can talk more about partnerships too, but that's how I found my first partner. And then from there, I found my other partners through meetups. So almost every major city has good meetups. So if you go on meetup.com or Facebook or something, you just search real estate meetups, you can go to these and you can get to know people who are doing the same thing. Really quickly, I will say if you're looking to partner, try and find someone who has sort of opposite skill sets of you. So it could be that you get along with somebody, but if they're exactly like you, that may not be the best partner. Because what you want is to find someone who's very good at the things that you're not great at or you don't want to do. Like here's an example would be like I like talking to people. I love communication. I like that kind of thing. I'm an engineer by trade, so I can do the numbers, but I don't love to. My partner is really, really detailed, super sharp with numbers. So he's great at that because he can take care of like a lot of the back of house stuff, right? And he's really tracking all the numbers, all the investments, all the distributions. Those things like need to be really, really accurate. I prefer talking to brokers. I prefer talking to investors. I prefer doing podcasts, that kind of thing. So he's a great, great partner. And now we do everything together just because we sort of mesh in that sense. So if you want to talk about markets, I'm happy to shift over there, or I can talk more about partnerships. And I never really answered your question about the first deal, so maybe let me finish that up first.
Yeah.
Um,
I wanna know all of it, so
okay, okay.
let's
Well,
finish up
like I
the
told you,
deal
all right,
first.
in the pre-show, like Mike can remember one. I love this stuff. So we were looking in Tulsa, and we found the first deal on market, and this is actually a great story. So it was a 48 unit in Jinx, which is a great neighborhood in Tulsa, and we just kind of went for it. We're like, okay, we have our mentors ready to help us sign the debt. The two of us think we can raise enough capital. We really liked the deal, so we flew to Tulsa, walked it, and we just offered on market. The broker was awesome. He kind of took a leap on us because you have to be honest. Like we're new. This is not we were not seasoned, right? So I think we offered a little bit high, maybe, but the returns ended up being great anyway. It's just one of those like maybe we overpaid. Looking back, it was totally fine just because it was such a good deal. But that's probably how we won the deal. I bet we just offered slightly higher than everyone else. Here's a cool story too, is shortly after we closed that, a broker reached out to us and said, "Hey, you guys were great to work with. I have another 48 unit. Before I go to market, would you like to have a look?" So we bought our second deal without like right on the heels of the first deal, without having to do anything, without having to talk to anyone. The broker came to us because they had heard we were easy to work with, raised the capital quickly, that kind of thing. So I will say reputation and the way you act is extremely, extremely important. We're like the way you treat your broker, the way you treat your investors, just the way you work with people is incredibly important. The way you treat your tenants. We talk about this all the time. It's a business, yes, but you're creating a community. This is someone's home. So we really, really focus on let's take care of people. And that's true in the transaction too. Like even your lender, right? I kind of have a funny saying, like I don't like lenders very much, but treat your lender with respect, right? They're on your team and your lawyer too. He's on your team. So just the more you can like be a good person, treat people with respect, the more things are going to come back at you. So the second deal came right away on the heels of that. So we bought two basically back to back, and then a third and a fourth shortly after that. So that was kind of the story of the first deal.
Wow, just kept rolling. Was that all 2019?
20 so the first two were in 2019, second two were in 2020. We've done I think we're about to close our 15th or so. We took a little break like a lot of people. 2024, we only bought one deal, just because the market was really, really tough. And so we're not gonna overpay for stuff, and we're not the kind of people who are, like, living on transactions. So, we ramped up really fast, took a little break, and now we're kinda ramping again because, the market's kinda made a shift. So scale was quick, and, I guess speaking of that, like you asked about partnerships, as we grew, we needed more partners. For example, when you get 4 or 5 properties, it becomes hard to manage them. So we partnered with, our asset manager. Her name's Bonnie, and she's amazing. Same story, we met her at a meetup. We liked her style. She said, "Yeah, I'd love to do this asset management thing." We kinda took a chance and let her, give it a go, basically. Like, Shane and I, my partner, were kind of helping, but she just went for it, and she's been awesome. So we grew out of necessity more than growing before we needed to. I mean, there's a million ways to do it, but that's how we did it. And then speaking of market, which we had talked about, I also talk about markets a lot, but I think there are hundreds of markets that work. So I'll give you my theory, and anyone listening,
Mhm.
take it with a salt. Basically, what I think is take the center of America, right? The West Coast is too expensive. It's kind of tenant friendly. I'm not knocking that. I'm just saying, as a landlord, it can be challenging with law. So I basically throw out the West Coast. East Coast, in my opinion, is too expensive. Same story throughout the West Coast, including Florida. Like, I don't want to be in any hurricane zones. The Gulf Coast, I stay away from. Same story. I don't want to be anywhere near hurricanes. Insurance has gone really wild down there.
Mhm.
And the, like, kinda Southwest, like, Phoenix area, I stay away from because 'cause I'm afraid of markets that have been crushed during recessions. So, like, Vegas and Phoenix, like, to each their own, they're not for me. Looking back at a graph of 2008, they both fell off a cliff, and so I'm like, "I don't want any part of that kinda market." But then you have the rest of America, which is a huge swath, right? Like, we're talking, like, Colorado all the way to, like, near the East Coast, like, basically all of the Midwest, all of the Central South. There's a lot of cities in there. So if you take any city over 100,000 people, I think this model works in any of those markets, with maybe the exception of Colorado being too expensive and Utah. But, like, every other state has a city that this model works. So if someone says, "What market should I choose?" I'm like, pick a city that you've been to that you like. Pick a place that you have family. Throw a dart. Nah, I mean, in the middle of the States, and you're gonna find a city that works. I mean, literally name a city in that swath, and you will find a multifamily deal in there that probably pencils with enough, perseverance, basically. So that's kind of my theory on markets, meaning there really are hundreds of markets that work. You just need to have to press into one. So let's just pick one out of a hat, like Wichita, Kansas. It's a small city. I guarantee you there's some multifamily properties that work there. If you wanna go there, look at Crexi or, LoopNet. Not saying you're gonna find a deal there, but find the brokers on those websites and start calling them. That's it. It's as easy as that. Say, "Hey, I wanna buy a multifamily property in Wichita. Do you know of any deals?" And they might say, "Yeah, I've got these 3," or, "I don't now, but let me get you on the email list." Call 6 or 7 brokers, and boom, pretty soon you're getting emails for deals. It really is that simple. And then from there, it takes the diligence to underwrite those deals. And that's kind of the process of getting started. I mean, it sounds easy and it really is. It's just a matter of doing it.
Are there any other criteria or filters, though, as far as are you looking at when you're doing a deeper dive into the research of a market? Is there anything else that you're looking at? I mean, like sometimes like population criteria,
Fine. Yeah, I mean, no
economics.
question. I mean, I kind of breezed over that, right? But if you go to city-data.com, that is by far the best resource. So Neil Bow and his team have done so much research. And so population growth is important. You want to see job growth. Crime is incredibly important. So there's a ton of crime data around the property. So I kind of breezed over the market saying there's hundreds, but what I meant was pick one and then do the research. So if you find a populate or a city that's, the population is declining, and industries leaving, obviously that's not a great market to be in, right? So yeah, population, job growth, and then crime would be probably the three I look at that are most important. You don't want to have a high crime area. You definitely need some growth, and then you want to have some diversity in jobs. So if a city's like all based around one factory, probably not a great market either, right? So when you look at like a pitch deck, you'll see, okay, what are the job in this city? Are there big hospitals? Is there a university? Is there some manufacturing? Just all kinds of stuff. If there's a diverse amount of jobs, then that's usually a great sign. Job growth, population growth, those are good signs.
Yeah, that's awesome. That's a lot of things that I look at too. I do mobile home parks, and that's all the same criteria as well that I deep dive into. For someone trying to make the just backtracking, someone trying to make the leap back from getting started in single. So you started in single family homes, right? And then you made the leap to buying apartments. But what made you think I'm going to switch now to a different and buy apartments?
I think like a lot of people, the initial thing was running out of money. So like what I find is I think a lot of people don't know really what multifamily is. It's becoming more popular, right? And it's good because I want people to know that this is a cool industry. This is a great model. It's a good thing to invest in my opinion. But like 10 years ago or 8 years ago, even, it wasn't really all that popular, really all that well known. And so lots of people started by listening to Bigger Pockets. Like most people I know who start in real estate, that's their story. Like, oh, I listened to Brandon Turner, blah, blah, blah. And they're like off and running, which I think is a great resource. And then you'll say you buy one or two investment properties, all of a sudden you're like fully out of money in most people's case, right? Or you're like, dang, I like that. I like real estate. I don't want to wait to save up money for the next one. What can I do? And that's when you realize, okay, there's a handful of things you can do. Either you can use seller financing, you can partner with people, or you can partner with a group of people, which is like syndication. And if you're doing that, then it opens the doors to bigger deals. And so for me, it was really like running out of money was like, all right, now what can I do? I started with high leverage with seller carry. That's a pretty risky maneuver, but I did that with some success. And then I met someone at a meetup who was doing multifamily, and that's really where it all started for me. I didn't at the time I didn't even know what it was. I just got lucky in meeting someone who was doing it. I probably would have stumbled into it over time, but that's how it happened to me. And the other thing too is I didn't like it at first. I didn't want to do it. I was like, I don't want partners. I don't want investors. You talked about that at the beginning, talking about why in raising capital is so hard. Lots of times it's just a mental block, you know. So I don't want to jump too far ahead, but that's what happened to me is I didn't want to raise capital. The more I learned about it, the more I dug in, the more I realized, oh, actually, this is really sweet and this is a great model and it really fits a lot of my skill sets. So I was just like prohibiting myself from moving forward. So I kind of had to get over that mental block a little bit before I went for it.
Let's dive into that. What did you do to get over that mental block? Because I struggle with that. I have to raise capital for some of the things I'm doing, and I'm always like, oh,
Yeah.
it's tough,
I think
you know?
I think the main shift, and I will tell you my personal story was basically like a battle of giving up control, I think, a little bit, even though I don't want to admit that. Like I wanted to like be the one in control. I also didn't love the idea of risking other people's money. And I still don't, right? Like that's a challenge. I like to treat other people's money more valuable than my own. I would rather lose my own than lose investor money. That's the truth. So when you take on investor capital, you have to have that in mind. Like treat it with the utmost respect. You have to, right? But that's just something to think about. So for me, I just kind of had to get over it. The main mental shift that I'll tell everyone is you're providing an opportunity for most people who invest with you. Usually they want to invest in real estate, but they either don't know how or don't have the time or both, right? And so for them, they're like, sweet, I can invest in a multifamily property. I can get pretty darn good returns. I don't have to do anything. Also, I get some depreciation. Like I could see some like negative cash flow on my tax return on paper that helps my taxes. That's pretty cool. And I don't have to do anything. So for most investors, you're providing an opportunity rather than asking for their money. So when I hear people say that, like, how do I ask investors for money? Like that's the immediate sign of like, you're not asking actually, you're showing the opportunity for them. And it's weird because we think of the stock market totally different. We're like, "Oh, yeah, invest in the stock market, invest in your IRA, invest in your 401k." It's exact same thing. You're buying stocks or shares in a company, and that's exactly what syndication is too. You're buying shares in a company that owns a multifamily property or self-storage or mobile home parks or whatever. It's the exact same thing, but for some reason we think it's different. Do you think Apple has any problem asking people to invest with them? No, because they think that they're gonna grow. So if you think your product is good, if you think that what you're investing in is solid, you're providing the opportunity for people to get a good return on their money rather than asking them to help you. And I think that's a major shift. So if you ask a lot of people, they're like, yeah, I'm excited to invest in real estate. I'm excited I don't have to do anything. And if the returns end up being like they are, that's pretty sweet. So I think it's kind of just a shift in thought process.
Yeah, exactly. Because you're the returns now, like, I mean, it's possible to get higher returns. I mean, in mobile home parks, you can get 8 to, 10% or more cash on cash back. And, that beats in your checking account at 4% any day, right? So
For
it's highly a benefit with the tax
Yeah, and
depreciation and
like
everything.
multifamily, I mean, a lot of times the gains are at the end. So there are some downsides. People say pros and cons. I think the con is your money is illiquid, right? So it's important to
Yeah.
tell your investors, hey, you're in it for the life of the deal. You're probably going to make your most amount of money at the exit, but along the way, it is hard to sell your shares. It's possible, but very hard. So I just tell people be planned to be in the deal for as long as the deal goes. That's the con. But at the end of the deal, mobile home parks, a lot of those are 15, 16 IRR, sometimes 20. That's way better, than any stock market can do. So I think not any, but let's say just index funds or something like that for doing apples to apples. So I think the returns can and have been a lot of times better. And again, we've talked about some tax benefits as well. I mean, if you can participate in some depreciation, which in most cases you can, a lot of times you see really good tax benefits on your K1s, which is a huge bonus.
Okay, so what's the script? So say you were going to approach me to raise some capital for one of your multifamily deals. What's the script? What's the line? Or what? How would
Like
you approach
like I'm
me?
approaching you as an investor or I'm approaching you to partner with me to raise
Yes.
as an
You're
investor.
approaching me as an investor,
Okay.
but we can
Well, I mean,
also do that too afterwards as a partner. The role
okay,
play is fun.
okay, I mean, this is amazing. You're asking amazing questions, so this is fun. Um, first thing I'll do is just ask a bunch of questions. I would ask you what's your financial situation. I would make sure that you have a financial backstop. So I always ask the question, this is not your last money, right? Because I don't want to take someone's like life savings and invest it. So I'm saying this is money that you could theoretically afford to lose and you can definitely afford to not have for the next 5 years. So this is basically like extra money you've saved that your family doesn't need. That's the first question. Assuming that you say, yep, I'm good. Then I say, well, okay, would you like to invest in real estate? And maybe I'll just ask you, are you interested in investing in real estate?
Yes, I am.
Okay. Do you have
Definitely.
the time, energy, desire to do it yourself?
I work a full-time job and I have 2 young kids, so I don't really have a lot of time right now to look into the deals,
Great.
hypothetically.
Right. And so that's basically the script would be like, and that's the answer that a lot of people give. And so then I say, okay, cool. We have this opportunity for you if you're interested. Now, I never pressure. I always tell people, I want you to learn all about the deal. But essentially, what we're doing is we create a company and you are part of that company. You own a small slice of an apartment building. Okay. So let's say we buy a 100-unit apartment building and let's say it's a $4 million purchase. We're going to need about $1 million down and we're probably going to need about $1 million for rehab and other stuff. So we're going to get $2 million together collectively, and then you own a portion of however much of that you want to invest in, and then you'll receive returns quarterly. And we'll give you updates monthly, and then we'll kind of course, tell you how the deal is going. And at the end, when we sell it, you get your equity back plus your portion of the profits, and that's pretty much it. And that's kind of the pitch I give to people. And I just say, hey, do you have any questions? And of course, lots of people do, but that's kind of it. Like it's more simple than I think sometimes we make it. Um, People, if they're in your shoes, who you were just acting like, has money, does not have the time, but they're interested in real estate. It's a really, really nice thing to invest in. And again, we've talked about the benefits. So It's not a terribly difficult sell, especially if you believe the product that you're buying, which I do. I mean, I love apartments. I really think we spend the time to buy right, and so it's easy for me to sell it because I'm like, I love it. I'm going to invest in it. I'm spending my time on it, all that stuff. So it'd be great if you want to join us.
I'm sold. I'm investing, Eric.
Okay, you can go to our portal at this and invest.
So yeah, that's an awesome question though.
That's great. The second part of that, so what if I want to partner with you, or you're trying to ask me if I want to partner to raise
Yeah, I
capital
mean, I
to join
think
your team?
so.
Mm.
Yeah, I think some people who have the ability to raise capital, right? So maybe they're just very outgoing people. Maybe they are in, let's say, medical sales, or maybe they're a doctor, or maybe a dentist, or maybe they're in some realm where they know people who have extra capital. What I've seen is a lot of times doctors are great capital raisers, or again, dentists, because they know other dentists who have extra capital but don't have time. So let's say that someone's like that, or maybe they just know high net worth people who want to invest with them, right? The other thing is like, are you a trustworthy person? And that's a hard question to ask somebody, but do you think that most people you have interacted with would trust you? And if the answer is yes to either one of those, I say, okay, great. Well, you might find yourself in a position where you could raise capital and be part of a team. And I have to always give the caveat: you're not allowed to raise capital alone. You have to do some other part of the deal, right? So it could be that you're part of investor communications, you're part of asset management, something. But SEC rules basically say you can't just be a capital raiser, that's it, right? But maybe
Mhm.
you could do a fund, which is a legal way of doing that. Or maybe you could join a team and again have a different role. But if you want to learn how to raise capital, that's a pretty specific tool, but it's also a very valuable thing. For someone who's out there listening, if you have the ability to raise capital, it's extremely valuable tool. I encourage you to join a good team of people you trust that are doing this business, and then you could make quite a bit of money raising capital.
Awesome. Yeah. Um,
Sold again. You can raise.
I'm sold again. Let's go. All right, so I want to switch to you living in Spain right now because you're obviously my show is called Invest in Rome for a reason. You're the epitome of what embodies the meaning of my show, which is you've done the real estate, and that has led you to jump ship and move overseas and engineer the life that you want to be living. And you've moved to Spain and are now enjoying that. But I want you to, if you could talk a little bit about that, how, real estate was that key for you to being able to do that. And on top of that, how are you doing it? How are you running your portfolio from overseas in Spain? And obviously you're working evening hours right now, but
Yeah. Yeah. So good question. I mean, I think, everyone's dream looks different, right? So like just to say Spain is the end all be all, no, that's not true. It just happens to be my wife and I wanted to live overseas and we had that kind of dream. So we set it in motion, right? We were like, okay, where do we want to live? And that's a hard question to ask anybody, but I'll spare you the details, but we wanted to learn Spanish. We wanted good education. We looked all over Latin America. We spent some time in Latin America, so we know it pretty well, but we're like, you know what, let's be in Europe so we can travel. And Spain is kind of the obvious choice if you learn Spanish. So that's kind of why we chose here. And then what we decided was, okay, let's quit our jobs and let's move our kids and let's find a good school. Let's find a good place to live and let's go for it. And what's interesting is, people ask that question, like, how do you run it from overseas? What's interesting is I've never purchased a multifamily property anywhere near where I live. I used to live in Durango, Colorado, which is like far from anywhere we invested in. So I was getting on a plane, usually two planes, if I was going to the property, which is fairly rare. My partner lives in Houston, and even he rarely goes there. It's just a reality. If you have a good property manager, we might go once a year to the property, unless the property's not going well. So running it from Spain and running it from Colorado feels oddly similar. The only thing I've done is request of my team that all the meetings basically move to the morning their time. So like 8 a.m. in Colorado is 4 p.m. here. So I'll say, hey, can we start at 7 a.m.? And then, I'll skip sort of dinner time so I can hang with my family and kids. And then sometimes I have late calls. Like tonight, I have a late call. Not a big deal for me because I'm kind of a night person anyway. So it really feels similar. It's the only difference is the hours have shifted. And then I also get the entire day with my wife. So like my wife and I kind of joke, like we go on walks on the beach a lot. we spend a lot of time together during the day because our kids are at school. We're just kind of hanging out in Spain. And so we feel like we have a really cool life here, but it does come with some sacrifice in the evening for me. So it's oddly similar. So for me, we had this goal, we had this desire to live abroad. We are about a year and a half into it. We don't know how long we'll be here, but we're really loving it. It's kind of a change of pace. Our kids love it. They have a great school. So we've just kind of found ourselves a lot of luck came into play too, because you just never know what it's going to do for you and your family. For us, we really loved it. So we took that leap and it turned out really great. And to answer your question about real estate, I mean, yeah, that's exactly it. I mean, that's why we invest in real estate, right? They provide some passive income. I still do some other types of stuff. So I do some like subdivisions and things like that to provide some cash flow. And then when you buy properties, you get cash flow that way too. You get acquisition fees and stuff. But I don't want to live off of those because I don't want to be forced to buy. So I just make sure we have enough cash. We have enough cash flow from other things, and then we continue to build wealth is the main driver of multifamily. Like I always tell people, multifamily is kind of like a wealth builder. You're kind of stacking your chips. Over time, you begin to make really good money once the properties sell because on the exit, you make your money, but it does take time to get there. So I always tell people like, be cautious that a lot of times multifamily isn't the cash flow machine that people want you to believe it is. Sometimes you need to stay working, or sometimes you need to have that another thing to provide some cash flow, but it does build wealth like you wouldn't believe because you're buying properties with none of your own money and you're getting equity in those deals. And so, my wealth has grown quite a bit, which I'm really grateful for, but we still need to have some other cash flow to live. The other thing about Spain is it's shockingly cheap. It's about half the price to live in Spain as it is in Colorado. So life is just a little cheaper, which is kind of nice.
That's the great thing about a lot of countries in Europe. I haven't looked too much in Spain, but I was just in Sweden, and over there, the kids have free preschool, free college,
Yeah.
everything, all the medical
Health.
care paid for. Yeah, exactly.
Yeah, our family insurance here for health insurance was $1,200 for like the ultimate gold. Like I got the highest, best that I could possibly could. It's $100 a month for my entire family, and it covers everything. So yeah, I mean, you pay taxes for it, right? The tax rate in Spain is 49%. So as a citizen, you're going to pay a lot of money. So there is a give and take. But as a foreigner living here, it's a pretty sweet setup. It's shockingly cheap to live abroad in some places. Spain specifically is very cheap, and it's a great country. I mean, it's a beautiful country, lots of food. There's lots of good to say about it. But we have really enjoyed the shift for sure.
I'm kind of curious, did your kids speak any Spanish? Are they in a Spanish-speaking school, or did you send them to a
We decided
English?
not to because we didn't know how long we were going to be. So we chose a British school, which is an international school, which I actually turned out I love because they have friends from around the world. The answer is no. They didn't speak a word of Spanish when we came. My wife's Spanish is now probably better than mine. When we came, mine was decent. So we're both pretty conversational, but our kids are learning quickly. You know how kids are, there's like sponges. So they have two
Sure.
Spanish, Spanish classes a week. So they're absorbing a ton, and they'll probably, and if we stay much longer, they'll probably pass us. They're they're just so good at learning language, and yeah, I mean that's true of any kid. Like they just learn so fast. But the answer is no. We didn't speak any Spanish. If we thought we would stay long term, I think we'll return to Colorado. It's just a matter of time. But if we were going to live here long term, we would have put them in a Spanish speaking school just so they could be perfectly fluent. But for now, they're in a British school, which we really love.
That's awesome. Yeah, because now they have global friends to go
Yeah,
visit.
they have friends from all over the world, and they're learning all these cultures, and, like, they're like, one of our son's, friends from Japan, and, like, 2 of the kids are, like, one's German, half Mexican, and they're just learning all these cultures, and it's just such a cool thing. So, that is honestly, the school is a huge part of why we love it here, but also just the culture here is great, and the beach, of course. So, I lived in Colorado my whole life, so I'd never really experienced, like, beach life, and that's kind of a nice change for sure. We miss winters though, I will say. Like I kinda miss the fall and I miss skiing. They have it here, but it's just not where we live.
Not the same as Colorado. Colorado has
No, not
also
not
mountain stuff.
not quite.
Not quite the same. Well, that's awesome. I mean, I always say one of my things is the best education you can get for anybody, for any kid, for anyone is to be abroad and to be traveling and being out there to meet, folks from different cultures and seeing what other people are doing. So
I completely agree with that. I think it's one of the most important things. If you have the ability to travel, I think it really is the most valuable tool. I mean, to your point, you learn so much. You learn how other people live. You learn about pros and cons of living in other places. You learn about their languages, cultures, styles of living. Just learn that people are people and that people are awesome all over the world. And there's different ways of doing things, but it's not right or wrong. It's just different. And so it's so awesome. Like, I can't say enough about travel, and it's to your point, I think it's extremely important. So it's not to say you have to live it somewhere, right? But go look around the world. Go if you have the ability, go check out the planet. People are amazing all over the world and just do cool stuff. So I completely agree with what you said.
I have a feeling you've traveled a lot, Eric.
We have
You've
traveled.
traveled
We
to
like,
many
I've been
places.
very blessed. Yes, traveled quite a bit. In fact, my kids, we were like doing a spreadsheet of the countries they've been to. They're very spoiled too. You have traveled quite a bit, but yeah, but it's because of what you said. The more you travel, I think it's like the more you realize how valuable it is and how cool it is, and just to spend time, having a peek into someone's culture, is it's really cool, and I don't think it'll get old for me. I really love it.
To kind of sum that up, so like, what is freedom look like for you right now that with the life that you built through real estate? You could sum
Yeah,
it
and
up
and
in
then
like a general statement, one statement.
Well, I think people say, like, "Do what you want, when you want, with who you want," and that's a good statement. For us personally, we do value travel, so I think my kids have been to, like, we've lost count, but like 16 countries, I think. And my oldest is 8 years old. So for us, the ability to do that and travel whenever we want. I mean, we've spent a lot of time. Basically, whenever school's out, we're traveling. And so to have one, the cash, which is, traveling can be expensive, and two, the freedom to do that is incredibly valuable for us. And so it's a season of life. I know, like, my brother, he has kids that are older, and so they like doing sports and they're very entrenched in their town and their friends and their things, and I think that's extremely valuable too. So I don't wanna say that, like, you have to be traveling, but in our season, our kids aren't into that stuff yet. They're not really old enough. So we know this is kind of like a sweet spot for us where our kids are old enough to remember it, old enough to experience it, but they're not, like, super, super entrenched in things yet, and I think they will. So we have to know, okay, during this particular season, we wanna travel as much as we possibly can. So in this moment, freedom looks like traveling wherever we want, whenever we want, and also just being open to, like, maybe we don't travel. Maybe we stay home for the weekend, but what does that look like? Is that, we can still go to the beach. Like, our my work life balance, I think, is pretty skewed in the different direction than most Americans. I don't work all that much, and that's by design. So that's what it means to me. I don't value a huge stack of money. I value time with my family and experiences more than money, and so for me, the freedom is we can travel, we have enough money to do those things, and I don't feel stressed about it, but I also don't need to work 12 hours a week or 12 hours a day, sorry. And so that's kind of what freedom looks like to me, which I feel, the thing is I know how blessed we are, I know how valuable that is. It came with a lot of work and sacrifice, but, it was by design. Like, we had the end in mind, and so working backwards, what I always tell people, it really is true. Think about 5 years from now where you wanna be, you could totally do it without question. In fact, you could probably do more than you think if you put in the effort, and so that's really the key. So I kinda rambled there, but that's what it looks like for me.
That's great. My oldest is 8 too. I think I need to go to
Nice.
Spain also or somewhere in Europe also.
Love it. Yeah, you're welcome anytime. We love, like, hosting people. We had some friends come with a little baby even. So people think, like, I have kids, I can't go. I'm like, "Yeah, you can." It's a little more challenging, right? With kids, it's a different pace, but it's totally doable, and they really love it. Kids love it too. So if you're willing to put in a little extra effort, travel is very possible with kids of any age.
Yes, I agree. I've been, trying to get my kids it takes some adjustment. The first big trip was like, I don't wanna walk," you know? But now they're good little travelers. Now they can sit on a long flight. They pack their little backpacks with stuff to
Nice.
do, and now they know what to expect, so it's gotten a lot easier.
Yeah, I mean, it is kinda like, I think kids feed off of you, right? Like, if you're having a miserable time, they probably will too. If you're having a great time, they probably will too. Now, it does come with, I mean, it's hard. Traveling with kids is harder for sure. I mean, they're gonna break down, they're gonna get hungry, they're gonna be tired. So I think you have to slow the pace. That's what we always say. Like, travel can't look fast. but it doesn't have to experience really cool stuff. And then looking at it through kids' eyes, like kids are so innocent. It's amazing. Like I love going to a museum with my kids because they're like see things completely different than I do. Like
Yeah.
it's just really
They get
fun.
so excited. It's so
Yeah,
cute.
yeah.
Yeah.
I mean, they're like, "Whoa, look at that!" I'm like, "That's cool. What do you see?" Like we went to this museum that I never thought my kids would like, but they were pointing out stuff in paintings and stuff and really loving it. I was like, "Well, I thought you guys would hate this." But they really loved it, so, like, looking through the kids' eyes in travel is really cool too. So, we kinda got into the travel thing, which I love, love, love talking about, so I appreciate you asking me because I think
I love talking about it all the time. So that's the name of my show, Invest in Rome, ROM. But I do want to jump back to you mentioned I don't work all that much. And I want to know, so have you set up some things? So have you set up some systems to get that going? Do you have how have you been able to accomplish that?
Yeah, I mean, okay, so the goal and a kind of the pace that we strive for is buying one property per quarter. Now, we've slowed that pace significantly just because there hasn't been deals. And I will also tell you, we got second place on the last 4 deals we offered on, which stings, right? Like you kind of there's sometimes in this business you get punched in the gut. One thing we will never do is overpay. So like I got second place because the broker's like, "Hey, these guys upped their price. Do you want to match them?" And it's kind of like, I don't. Like I think we're a better buyer, but I can't go higher. And that's hard to say, right? But the reason I brought all this up is because we want to buy at a pace of basically one per quarter. And that's a very manageable pace. When you're under contract, there's a lot to do. Capital raise, you're doing the lending, you're doing the due diligence, all that stuff. But it's kind of like this systematic thing. So to answer the question, yeah, we have this due diligence checklist that's like really crystal clear. Like, do we do all these 50 things? Lending has become easier because we have relationships with lenders. They know we're good buyers. So it's become easier over time. So to answer the question, yes, we have systems. So Bonnie's our lead asset manager. She is kind of running the projects that we own. I keep a close eye and I join as many of the calls as we can. For every deal we own for longer than 1 year, we have one call every other week with a property manager, unless there's some reason or something going on. So if you kind of think about it, you have 2 calls per month, let's say, per property. It's really not a lot of time. Those calls are about 30 minutes. And so, we own 15 properties, and so we're talking like 30 half-hour calls per month is the amount, which we don't all go in every time because we split them up, right? So, like, Shane takes some deals, I take some deals, Bonnie takes the majority. And then, for raising capital, sometimes it can be hard, but a lot of those things are automated too. Like, a lot of our investors are repeat investors, so they actually don't require anything because they just wanna invest with us. If it's a new investor, yeah, you have to be available for those calls, but it really isn't a massive amount of work. And then brokers, they know us too. Early on, it's gonna require much more time. You're just gonna have to be on the phone and call brokers. Now, when I call a broker, which is actually rare, I text them more often than call them just because 'cause we're friends. It's not a long conversation. It's like, "Hey, hope you're doing well. Hope your kids are well. Do you have any deals that we'd be interested in?" And then it's like, "Yeah, shoot them over my way. Great talking to you." Like, that's usually the conversation. I know it sounds simple. So if you think about multifamily in general as what is the work to be done leading up to the purchase, that's the most amount of work. Once we own it, it's not that much. I know it sounds crazy. It's just not. I put a lot of effort into our reporting. So my wife and I do the investor reports. We do that monthly for every property. That's the most amount of time we work because I'm looking at every profit and loss every month for every deal. And then we put an investor report together. But those probably take an hour each per property if I'm shooting high. So again, if you're doing the math, like it's not that many hours. And I will attribute it to a great team more than systems. If you're working alongside people who agree with the business plan, none of us work all that much because we have a good system set up. But it's very possible to do this even part time, right? Like you could do this on the side, and that's how I start. That's how a lot of people start. So if you're in a W-2 job and you like, I really want to make more money, I want to have more retirement, I want to have more wealth, you can totally do multifamily on the side. And I think a lot of people start that way.
You touched on, and this is probably the last question, but you touched on don't expect a lot of cash flow though. It's a great wealth builder, but it's more of the end game. Real estate, and a lot of people ask me that, can I quit my job and just do real estate? And my reply is always, well, real estate's a long game, and it's going to take a little bit of time. But what would you say to someone kind of just wanting to get into real estate, but they want to quit their job like tomorrow?
Yeah, and I do encounter those people. I do some coaching. So I do some coaching. I have a mastermind. So I encounter that a lot. A lot of people, that's their motivator, right? Like they want to quit. What I normally tell people is it's absolutely possible to quit your job in a month. So I had a coaching client who did that, quit his job 1 month after we started, but he started flipping. And I was like, you need a cash flow generator and a wealth generator if you're going to quit your job and expect to be in real estate long term. So I think that's the great lie that people have been sold is that multifamily, you can like start multifamily and quit your job in 6 months. It's like, it'd be really hard to do that unless you're buying a lot of deals and you're living off of acquisition fees, which again, I think is kind of a dangerous place to be. I think it's better if you want to quit your job and you want to be in real estate, find something that generates cash flow like wholesaling or flipping or like subdivisions or some kind of cash flow creator, and then multifamily or mobile home parks or self-storage, those things are wealth creators. Those are you're building equity over time. Then if you look at how you make your money in multifamily or in syndications, I'll just say, you make your money on the exit. So let's say you buy a property now, right now, you might get between 30 and $60,000 in acquisition fee, which is not a small amount of money, right? But on the exit, if you do a good job, you're probably getting more like $150,000 check, something like that, right? So if you look, okay, let's buy 3 properties this year. 5 years from now, if those 3 properties sell, I'm gonna make a lot of money that year, and either you can reinvest it or you can use it to live on. But to your point, it's a long-term game. It really is. It's not a get rich quick scheme. So if you're gonna quit your job and you're gonna go into real estate tomorrow, you could do it, but it's gonna require a different mechanism of cash flow, and then you can do syndication to build wealth. The other option would be what we said is to do things on the side, right? So if you wanted to continue working, if you like your job, or you don't like your job, but you can stand your job, you could do it and continue, let that be the cash flow builder, do multifamily, start acquiring properties, and eventually you have some properties that you're starting to sell, or you have a system that works well, or you have a cash flow generator, you can quit your job. So I think people have been lied to a little bit.
Mhm.
There's not a lot of cash flow in syndication for the GPs until the property sells.
Yeah, good point. Very valid point. Yeah, I think people often
Or you're
misled.
in a bubble. You can quit your job. I just think you need to do
Yeah, you need some
something
backup
other.
plan or you need something. Exactly.
Yeah, yeah, yeah.
Exactly. I think a lot of people don't realize that. Exactly.
Yeah.
All right, Eric, this was awesome. So great to have you on. Where can people find you and reach out to you?
Yeah, they can find me, well, Wild Oak Capital is our website, so you can find me there. My email is eric@wildoakcapital.com. I also do some coaching. I hope you don't mind me pitching. If you wanna find me,
Sure.
it's Eric Nelson, ericnelsoncoaching.com. So feel free to check that out. I have a mastermind. I do some coaching and mentoring, that kind of thing. I think it's extremely valuable. I don't take on that many, people, so I just keep it small so I can make sure that the people that I coach are successful. But that's where you can find me. And I really love talking real estate, obviously. So I will answer all emails. If you shoot me an email, I'll respond. So yeah, I'm excited to talk to anybody who's listening.
Awesome. Thank you, Eric. And I'll put all the contact show notes in the show notes and links and everything. So thank you, everybody. And thank you, Eric.
Yeah, my pleasure. Thanks for having me.